Good afternoon, everybody. Welcome to our weekly webinar now. I hope everybody is safe. I hope you are doing well. I'm getting tired of hearing people say this, but it's very true. The fact that things are just so uncertain right now. So I hope you are doing well. I think we have some good information today as we're living in a time where we're not even sure what we're going to do from the next day to day or what things are going to look like. And especially that's true when you look at things in the next month, the next couple months, and people are just unsure what is going to happen. And so I know this is true really in all facets of our life, but it's true certainly in our retirement. And I know people have a lot of concerns. I know people have just a lot of questions as to what is going to happen. And so we want to take some time today and go through what this looks like from a retirement aspect. And so what I wanted to do today was give, number one, some perspective on some history, some times that we've experienced some, whether you call it traumatic or stressful or some concerns when it comes to retirement, and then also want to end today by just giving some points to consider in the future depending on what phase of life that you're in. So welcome. My name is Brian Menier, one of the partners here at Keystone Financial Group, and welcome to the webinar to Keep Calm and Retire On. So let's start by looking at the Dow Jones over the last 20 years. Now, when you look at this chart, you look at it and you think, wow, that trend line does go up and to the right. And when you look at it, you think, man, there's been some significant growth over the last 40 years between 1980 and 2020. And when you look at it from a perspective of recent history, especially over the last couple months, it feels like, man, we've really taken a beating. But when you look at it from a long-term perspective, when you look at it from a standpoint of if I started my work history and I worked over these last 40 years and I have consistently invested and saved over time, you would have a good amount saved up and you would have significant amount of growth. Now, what's important to remember during these last 40 years is there was some considerable times where we faced some losses. Many of you remember 2001. Many of you remember 2008. You can see that gray area on the screen there. That was a significant time period. And if you retired during that time period, you remember that was a really, really difficult time. Within that time period, there were actually 6 bear markets and 6 bull markets. And in spite of all of them, we've also been what I would say resilient. And I would say I'm somebody that does believe in what's called an efficient market. I think what I would say stay the course, and that can mean some different things to different people. But I think if you look at this chart, you could see that over the last 40 years, there has been some significant growth. And it's important to understand that we've had time periods where we have faced some very difficult times and experienced very significant losses. But for those people that were disciplined and stayed with their plan, they were able to experience some very significant growth times as well. So many of you may be on this thinking, man, where did all this start? How did we get to a point where we are currently and where we are today? And so if you remember back in January, China had its first reported death from this COVID-19. And so this is a time frame or a timeline of some of the events that have unfolded. And I know for us here in the U.S., this has just really hit home for us back in March. It seems like such a long time ago that this actually started, but this is a time frame of where things started. I think the encouraging thing to think about is that there are measures that are now being made to get us on the right track. It doesn't always feel that way, and that feels like it even changes every day or sometimes every hour. But this is just an interesting time frame to go back and say, okay, where did this started and what was the time frame of where all this went down? So if we look at some historical data, I think this is a really good perspective to understand that there have been some really significant losses over the period of these last 40 years that we're talking about. Now, two of these, March 16th and March 12th, were specifically due to the coronavirus, but you can see that that was not even the largest, either one of those were the largest or even in the top two of losses in a single day. We see that one there was over 20% loss in October of 1987. So there's no mistaking that there have been drops that have been really big, but what we can say is there's nothing that we haven't seen before. And I'm sure there were times where people were experiencing these and they were thinking, man, this is going to be just the collapse of my retirement. What's going to happen? What should I do? And it's just good to understand and remember that this has happened before. Maybe not necessarily with a virus, but we have seen major drops in the Dow. And so it's important to understand that when you see these, that okay, we can recover from this because in the past we have been able to recover from those time frames. Now let's look at what the Dow Jones has looked like in just the last 10 years. Okay, so the chart before, if you look at 40 years, you're like, okay, that's great. Maybe I haven't been working for 40 years. Maybe I've only been working 10, 20 years. What about now? What does that mean? So let's go back and look at the last 10 years. And one of the things that I've been telling folks is when you look at it, this has erased the last 18 months to maybe, depending on what kind of investor you are, maybe 2+ years of growth that you would have had. But what you can see is over that last 10 years, that growth is still there. When you look at this chart, that tells a story of if I would have started 10 years ago and where I've ended up today, I'm still in a much better place than where I was a decade ago. Okay? So let's remind ourselves that we've been able to grow at an unprecedented pace. This has been the longest bull market that we've ever faced as a country. The loss only demonstrated that by doing the right things and reinvesting in the market when things are on sale, help us accelerate growth. That could be a story for you as an investor now. Now, I'm also aware that many of you or some of you, maybe you're in a position where you've lost a job or your job is not very stable and you're not sure what to do. But there are those that are still working. Their jobs are stable. They have the opportunity to continue to invest in things. And if you are in that situation or you're in that category, this is the time to do that, because if history's taught us anything, it's when those individuals that were able to do that, especially during those bad times, were able to invest. They were much better off in the future. Many of you remember 2008. 2008 was a very rough time for a lot of people. A lot of people lost jobs as well during that time period. Some very significant losses when the Dow was actually under 10,000. And so what's the difference? Because I think a lot of times you look at a situation in the past and you try to compare it to present day. So how is that different? Well, obviously we're in a situation now where we're talking about health. We're talking about a virus and something that we haven't experienced in the last 100 years. And so the biggest difference was in 2008, we had a situation where the banks were unhealthy. The banks were problematic. We're here now, it's more of a health concern where the banks are not the concern where it was years ago. So are there similarities? Are there differences? Obviously there's differences. So I don't know that we can look exactly back at 2008 and say, well, the timeline for recovery was 4, 5, 6 years, depending on what you were invested in, versus now. So are we going to take another 3, 4, 5 years to recover from the losses that we have sustained over the last 2 months? We don't know that yet because there is so much uncertainty and we don't know where things are going to go. We don't know when people are going to get back to work. I feel confident that things will get back. We just don't know what that timeline is, and there are differences between what happened in 2008 and what is happening today. So what is next? What happens? What can we expect over the next couple months, over the next year? And that's what everybody is wondering is where do we go from here? Is there going to be health recovery? Is there going to be business as usual? If you're listening to this and you're thinking, I'm one of those people that just unexpectedly lost a job, when are we going to go back to business? And I know, depending on what state you're in, because we have people on this from different states, that's going to be different depending on which state that you live in. And so different governors are going to make different choices. And I know there's going to be people on both sides of the argument of, no, we should take our time. And there's other people that are saying we need to go back to business because it's hurting us economically. Will there be more government assistance? In fact, I was just listening to something where if you're a business owner and you applied for that PPP loan, thousands of people weren't able to get that. It's supposedly it's hopefully going to go through the House, and they're going to have round 2 of this. How much more government assistance? There was a big stimulus bill, and hopefully if you're on this and you qualified for that, you've already received that payment. Is there going to be more? There's been discussion of possibly more. So we're going to see where that unfolds. And then with jobs as well, what does that look like for people that lost their job? What about those that are still working, but they know that, hey, over the next couple months, things are going to be a little bit shaky. And so these are just a lot of things that we are really not sure. And I think the real effect of this is not going to be seen until the next couple of months. I think some businesses, if we're realistic, they're not going to survive this. Some people have, some people will lose their job. And so I think we would expect to see the bottom of this probably in quarter 3 or quarter 4 of this year. I think there's things that are going to continue to have a decline based on some things that are going to unfold. So still not sure as to what those are going to happen. Those are things that we want to happen, but I think we're not going to really see the effect of this until months down the road. And so depending on the type of recovery that happens is where we'll end up, where this will all shake out. So if you look at the different types of recoveries, and we don't know what type of recovery we eventually will get to. We'll get there, but it's going to take some time, depending on either if it's a U-shape, a V-shape, or an L-shape. So let's start with, what does a U-shape recovery look like? Well, a U-shape recovery, this is a type of economic recession and recovery. Obviously, it's going to resemble a U-shape when you chart this out. So this represents the shape of a chart of certain economic measures such as unemployment, GDP, and industrial output. And it's charted when the economy experiences a gradual decline in these metrics, followed by a gradual rise to its previous peak. Now, of the U.S. recessions charted since the mid-40s, approximately half have been described by economists as U-shaped. This is including the 1973, 75 recession, and then the one that occurred in the early 80s. So we're not sure if this is what is going to happen, but this would be represented if it was a U-shaped recovery. So what about a V-shaped? What does that look like? Well, V-shaped recovery, this is a type of recession and recovery. It's obviously going to resemble that V-shape when you chart it out. This represents the shape of a chart of economic measures which economists create when examining recessions that involve a sharp decline in metrics followed by a sharp rise back to its previous peak. Now, it has kind of felt like this to some degree when you look at, originally we had these couple days where there were significant losses, and then whether it was because the stimulus was announced or certain other measures were taking place, you would see these big gains. And this is actually how it started off, when the market was literally, for the first week, it was dropping like 1,000 points a day each day. And then all of a sudden it would go up, almost to that extent. And it kind of felt like that. Actually, the recession back in 1953 in the U.S., this is actually a clear example of this V-shaped recovery. So I don't know how many history buffs, or for those of you that go back in time and research this, but this would represent a V-shape. The economy was booming in the early 50s, but the Federal Reserve anticipated inflation, and what it did is it raised interest rates, and it tipped the economy into a recession. And this is why you hear a lot of discussion, even recently, about, do we continue to lower interest rates because of things like this that had happened. So that's a V-shaped recovery. And then you have what's called an L-shaped recovery. And this is a type of that is a sharp economic decline, and it's followed by stagnant growth. And this is actually what Greece experienced back in 2006 and 2007. Okay, it's obviously in the shape of an L. So what are we going to face here? We don't know. What a lot of people are hoping is that we continue at some point back to a place where we're working, back to a place where this market picks up. But if 2008 was any indicator of what happened, it took a lot of people upwards of 5 years to get back to just where they were when 2008 started. Okay, so if we go back in time, I want to show this chart one more time, and we look at, okay, what did the market look like over the last 40 years, and you see some of the significant losses happen. This is a reminder that the market did come back, and I think it will. We just don't know when. Okay, we are not someone at Keystone that tries to be market timers. That's not what we do, and that's a very, very difficult thing to try to predict. So if you're listening to this and you're a working professional in your 30s, your 40s, maybe even your early 50s, what I would tell you is, unless you are at risk of losing a job and you don't have any savings set aside for an emergency or a time when you need to be prepared to have extra savings, I don't think you necessarily need to do anything to change the strategy that you're currently in. Because if history is any indicator, this will come back. And this is why we work to understand with you what your long-term, short-term objectives are. And if you're continuing to invest, you will eventually come out of this. And this chart is a good reminder of if past performance is any predictor of future indicators, then we know that we eventually will come out of this. Now, where this matters is if you're in one of these three categories, whether you're retired, whether you're going to retire this year, or whether you're going to retire within the next 5 years. Because if you're in one of those categories, then you want to make sure that you have specific actions and a specific plan that you are going to make sure to implement so that you are going to be prepared in the event that this could get worse. And there are things that would say that the market could continue to go down, which means it's going to have a profound impact on your overall retirement. So what if you are retired right now? What are some things that you need to be looking at, and what are some things that you are going to need to consider? Well, number one, you need to ensure that you have an income stream. There are a lot of people that I will talk to that really don't have an income stream. They have assets saved up, but if they run out of those assets, they really don't have anything in addition to that. So do you have a current income stream that's going to provide you income regardless of how long you live, or if you're married, how long you and your spouse live? I think that is really important for people to understand, to make sure that they have that income stream set aside. Also want to look at Social Security. Now, I've worked with enough people that maybe you haven't filed for Social Security even though that you're retired. So what does that look like? You want to make sure that you understand from a Social Security standpoint all the implications of what is going to happen once you file for Social Security, or if you have filed. So for example, what does that mean if you're married and one of you passes away? What does your survivor benefit look like? What does that mean if you haven't filed yet and you work for a place like a school system and you're getting a pension from some sort of government entity, and you thought that you were getting a certain amount in Social Security, and now you call Social Security and you're like, I'm ready to file, and they tell you you're not going to get the amount that you thought you get. So you just want to make sure that you understand what that looks like. What about the tax codes? This is a really important thing to consider, because a lot of people aren't aware that even before COVID-19, the tax codes were set to change in the next 5 years. So we are at an all-time low as it pertains to taxes. Are you in a position now, if you have a lot of pre-tax money, pre-tax assets, meaning that you have assets that you have not paid taxes on, and when you have to take a distribution, that you're going to have to pay the taxes on that entire distribution? So are you set? Are you in a position to maybe even do some Roth conversions, or looking at other strategies that you can move some of those pre-tax dollars to after-tax dollars in an environment where taxes are at an all-time low. Now, I think many people, if I were to ask even before COVID-19 started, and I said, are taxes going to go up or down? I would say probably 99% of people would say taxes are going to go up. And I think because of all that is happening right now, because of the different stimulus and things that are happening with the government assistance, there's no doubt taxes are going to go up. So you may be in a position to start repositioning some of those assets from pre-tax dollars to after-tax dollars, so that when you need to take that money later, or even pass that money down for legacy purposes, that money is going to be without any tax obligation. I think if you're retired, you need to make sure that you have a good will and estate plan, to make sure you're talking to an attorney that knows what they're talking about as it pertains to will and trust, and what does that mean from a position if you have to go into a nursing home, what's your long-term care plan? We have people that can help with this that we partner with. So you want to make sure that you have that set aside and you're looking at those particular aspects if you are retired. Now, what if you were going to retire this year, either because you're forced to retire or because you've already had plans and this was the year that you're going to retire? You're going to want to make sure that all those things that we just talked about, that you have lifetime income, that you're set, that you know what you're going to do with Social Security, you know what you're going to do from a tax perspective and how you're going to access those different funds. Let's say you have an IRA and a Roth IRA and a taxable account, and you have these different funds set up. What is the most efficient way for you to start taking distributions from each of those accounts? Have you worked with someone and have you talked to someone about when you're going to take Social Security? Should you take your Social Security first, or should you start taking retirement funds first? Those are things you really want to make sure that you understand. What about Medicare and Social Security and coordinating those? Are you on a budget? Have you started tracking what you need to spend every single month and what you have spent, so that you know in retirement, our statistics show that that's not going to change that much once you retire. So what do you need from a budgeting standpoint? And what does that look like with all those other things? Are you lowering debt? And then even emotionally, what does that mean for you? Because people that retire, there's some emotional things that you transition to that you want to make sure that you're ready. And then what about if you're going to retire in the next 5 years? One of the things when I teach my Social Security classes is I tell people all the time that between 3 and 5 years before you retire is really a good time for you to start putting together a retirement plan, because all those things that we talked about, if you're currently retired, those are things that you need to start considering now, even if you're upwards of 5 years away from retirement. Because let's say this situation with the market continues to occur, and let's say that things really get bad throughout the course of this year and they drop even more so than they have right now. Are you in a position where you want to let that ride out, where it may take you 3, 4, 5, maybe longer, maybe 6 years to recover what you lost, when a portion of that income you can set aside and guarantee some income for yourself? So those are things that you want to start considering. These are things that you want to start making adjustments in your budget for. And the thing that I would also say is if you're 3, 4, 5 years away from retirement and you're able to start saving as much as you can, even more so than you have been, this is a really good time to start making additional savings plans. This is a great time to reduce or eliminate certain debt that you have. Mortgage can be good to eliminate. Sometimes it's not the best way to use those funds. So you really need to talk to somebody and get some perspective on, is it good for me to eliminate and pay more on my mortgage, or should I just stay the course? Because there's advantages and disadvantages to both of those thought processes, and that's something that you're just going to need a plan to understand exactly what that looks like. So those are things that as you are getting ready to retire in your retirement, it's really important that you are talking to somebody about that. And if you're a client on this call, we want to make sure that you are keeping up to date on that, because we also know that things do change on a day-to-day basis. So if you've worked with us, you know that we're going to look and understand what's important to you, educate you on all the processes. One of the things that people a lot of times think is, if it works for somebody else, it's going to work for me. Everybody is different. You need to have a unique plan with this. And so we're going to understand exactly your situation, try to solve exactly what you need. If you're on this, and let's say that you're not working with one of us and you're working with your own advisor outside of Keystone, and you're in that situation where you have not put together a retirement plan, and not just a plan where you have a bunch of assets and an advisor says to you, yes, you're fine, you're going to be able to live and take a certain amount of percentage, that is not an income plan. You need to work with someone to specifically say, this is the income that you're going to be able to take, and this is how long it's going to last, and we're going to be able to provide some guarantees with that, making sure that that is actually solved for you and not that you're guessing. The people that do this right have clients that are sleeping a lot better during this time period than the ones that are looking at the market history and looking at where the market they think it's going to go, because it just causes some anxiety every single day because their retirement is uncertain. And so these are things we would love to help you with if we haven't either done that already or you're working with someone who hasn't put that together for you. So a lot to consider in a 30-minute time period. And these are not things that we think that you're going to be able to just take away and say, yes, I'm ready to implement that. That's why we are here for you. So Rose's information is on the screen. You can call her, email her. We'll be happy to set a time for you. Even if we just talked to you and you're here and you're one of our clients and we've talked to you already and you still have questions, please reach out. We want to be here for you. We want to make sure that you feel as good as you can during this crazy time right now. So as always, we really thank you for your time. We thank you that you're attending today. We thank you if you're working with us, and we do value you, and we look forward to talking to you soon. So please reach out if you have questions. Everybody, we want you to stay healthy and hope that you are doing well. So take care, and we look forward to talking to you soon.